Massive rate cut. Massive rate cut in Canada, as I have been predicting all along. Let's discuss the reasons and the implications, and also how you, as a consumer and a mortgage holder, will benefit from this huge rate cut in Canada. Friends, as you know that we are running a promotion that when we reach 2000 subscribers, we will pick one name from the list of subscribers and the winner gets $250 Costco gift certificate. The name of the winner will be announced on this channel. And I want to thank you all for the super success of all my videos. You're watching my videos in thousands and thousands, friends. Thank you very much for that. And since you're already watching my videos in those high numbers, just click the subscribe button. Your name can be drawn for a cash prize. Why would you want to leave it? And I wish you the best for all the same. Coming back to today's topic. As we were anticipating, and we have been discussing it in my videos and also on my radio interviews, that the rate of interest could go down again on October 23rd, and exactly the same has happened again. The Governor of the Bank of Canada, Tiff Macklem, reduced the overnight rate of interest from 4.25% to 3.75%. This massive 0.5% rate reduction came after reducing the rate already 3 times in 2024. So this is the consecutive fourth cut. This decision marks a significant shift in the central bank's monetary policy, aiming to bolster economic activity and address the growing uncertainties. Over the following year, the Bank of Canada raised its rate several times in an effort to help combat rising inflation, culminating in July 2023 when the overnight lending rate hit 5%. The Bank of Canada held that rate until June the 5th, 2024. Now, with continued evidence that underlying inflation is easing, the Bank of Canada's Governing Council agreed that monetary policy no longer needs to be as restrictive and reduced. The inflation right now stands at 1.6% as compared to 8.1% in February of 2022. Recent data increased our confidence that the inflation will continue to keep itself under the 2% target rate. The Bank of Canada's interest rate policy has an impact on the rate at which all Canadian banks will lend money to businesses and individuals, which includes mortgage rates. As a result, the prime lending rate, which on June 4th was 7.2%, has now dropped to 5.95%. Now that the Bank of Canada has made this fourth consecutive rate change to its overnight rate, homeowners with a variable rate mortgage could see more of their money going towards the principal amount on their mortgage and less towards interest. That means a homeowner could possibly pay off their mortgage faster than in a higher rate environment. For homeowners on a fixed rate mortgage, this rate cut may be helpful but might not ease all affordability concerns because their mortgage is already locked in at whatever rate, but the cost of living apart from the mortgage is going to be helpful for them as well. Now, even if the interest rates are starting to come down, people who have fixed rate mortgages that are up for renewal may renew at a rate that is higher than what they had before, especially if they secured a mortgage during the thick of the pandemic when interest rates were at historic lows. Many Canadians, especially first-time home buyers and existing homeowners looking to renew their mortgage, have been watching the central bank's rate decisions very carefully as they affect the rate at which Canadian banks can lend money for loans like mortgages. Now, because the Bank of Canada's benchmark rate serves as a reference point for interest rates that financial institutions charge to their customers on products such as mortgages and loans, The Bank of Canada's decision means that people with variable rate mortgages that fluctuate up and down with rate hikes or cuts, could soon start to see huge financial relief. Now, I believe that the Bank of Canada did not want to wait any longer to provide these massive rate cuts. This was the right time and has signaled millions of people in Canada who are holding to buy a property. Now is the time, and the rate of interest will further go down one more time in 2024 on December the 11th. And after this, approximately 1 to 1.5% rate reduction is being predicted for 2025 as well. Friends, now if you're liking this video, please smash the like button. It will help the YouTube algorithm and ultimately this channel, and you will never miss any of my upcoming videos. Coming back to the reasons for the rate cut. The decision to reduce this rate interest comes amid several economic challenges. Chief among them is the huge decrease in the inflation rate, which right now stays at 1.6%, and then the sluggish growth in domestic and the global markets. Recent data indicated that Canada's GDP growth has been slower than expected in the first quarter of 2024, with significant contractions in key sectors such as manufacturing and retail. Additionally, the global economic outlook has been clouded by uncertainties, including geopolitical tensions and trade disruptions. These factors have collectively contributed to a more cautious economic environment, prompting the Bank of Canada to take preemptive action to support the growth. Now, coming back, how will this impact the Canadian economy? The reduction in the interest rate is expected to have several immediate and long-term effects on the Canadian economy. Stimulating borrowing and spending. Lower interest rates typically reduce the cost of borrowing for consumers and businesses. This can lead to increased spending on goods and services, thereby stimulating economic activity. Home buyers in particular may benefit from reduced mortgage rates, potentially revitalizing the housing market. Now, this rate reduction not only encourages investment, also depreciates the Canadian dollar. While the Canadian dollar, when it goes down, makes imports more expensive, it can boost exports by making the Canadian goods and services more competitive on the global stage. Now, this could help narrow the trade deficit and support domestic industries. The financial markets have and will respond positively to these rate cuts. Investors have been and will seem reassured by the central bank's commitment to supporting the economy. Now, the Bank of Canada's decision to lower this interest rate underscores the complex balancing act central banks must perform in navigating economic challenges. By reducing this cost of borrowing, the central bank aims to stimulate economic activity and maintain price stability amid a backdrop of global uncertainties and domestic economic concerns. As the effects of this policy shift unfold, stakeholders across the economy, from consumers and businesses to investors and policymakers, will be closely watching to gauge its impact on Canada's economic trajectory. Now, let's discuss what will be the impact of this rate cut on Canadian real estate sector. First, I want to reiterate that until now, the previous 3 rate reductions have not had any impact on the real estate of Canada, as people have been depleted in the last 3 to 4 years of all their savings and have been paying an extraordinarily high rate of interest on both mortgages and otherwise as well. This massive rate reduction, coming up with another possible reduction on December 11th, will nail the problem right at the source. This massive reduction of 50 basis points by the central bank is poised to have a significant implication for the Ontario real estate market. Now, as one of Canada's most dynamic and diverse real estate markets, Ontario stands to experience a range of effects from its policy change impacting buyers, sellers, investors, and the broader economy. Now, lower interest rates generally translate to reduced mortgage rates, making borrowing cheaper for prospective home buyers. This reduction in financing costs will lower monthly mortgage payments, making home ownership more accessible to a broader range of buyers. In Ontario, where housing affordability has been a pressing issue, this could lead to increased demand for homes. Now, first-time home buyers in particular are likely to benefit from this huge rate cut as well. With lower mortgage rates, the barriers to entering the housing market are reduced, potentially leading to a surge in home purchase applications. This increased demand now will drive up home prices in the short term as more buyers compete for available properties. This price increase in the homes is very much needed in Canada, friends, as the appraisals are still falling short on value, and millions of homeowners in Canada who are looking to buy or refinance their properties are struggling. Almost every mortgage deal right now I am getting is falling short on appraised values, which is making the consumers not only worried but hugely stressed as well. This reduction in interest rates is expected to spur overall activity in the housing market. Sellers might find it easier to attract buyers, leading to quicker sales and potentially higher sales prices. Real estate agents and brokers may also see increased businesses as both buying and selling activities will pick up. Lower interest rates can make the real estate investments more attractive as well. Investors looking to purchase rental properties or engage in real estate development may find it more feasible to finance their projects. This could lead to an increase in supply of rental properties, potentially stabilizing or even reducing the rental prices in the long term. Additionally, lowering these borrowing costs might also encourage foreign investment in Ontario's real estate market. International investors attracted by the relative affordability of borrowing and the stability of Canadian economy might contribute to increased demand for high-end and commercial properties as well. Now, the impact of these interest rate cuts in the Ontario real estate market is likely to extend beyond just property transactions as well. Increased activity in the housing market can stimulate related industries such as construction, home renovation, and retail, especially for home furnishings and appliances, which can contribute to job creation and economic growth in the province. Moreover, as more people purchase homes, there might be increased demand for public services and infrastructure, leading to potential growth in municipal investments and developments. So in conclusion, friends, I can say that the Bank of Canada's interest rate cut is poised to have a substantial impact on the Ontario real estate market. By making borrowing more affordable, the rate reduction is likely to stimulate demand, increase market activity, and attract investments. As the effects of this monetary policy change unfold, the Ontario real estate market will closely be watched by buyers, sellers, investors, and policymakers alike, all seeking to navigate the opportunities and challenges presented by this new economic landscape. The Bank of Canada's interest rate decision on October 23, 2024, which was yesterday, resulted in a reduction aimed at stimulating the Canadian economy. This cut comes after months of high inflation, with the inflation rate now sitting below the target rate of 2%. Now, by lowering this rate, the bank hopes to further cool the economy without tipping it into recession following earlier decreases in 2024 as well. And I can safely predict that in the middle of this very beautiful autumn of 2024, these rate cut reductions will fuel consumer sentiments, and people who have been holding back will come to the fore and take advantage. This will also pump the refinance market. People who have been stuck with credit card debt and higher rates on mortgages, and people who are in high interest private mortgages will now be able to switch their mortgages to banks and other financial institutions, as they will be able to qualify now. All this money that is saved from interest payments will now go into consumer spending, and that will increase the GDP of Canada. So friends, if you're looking to refinance your mortgage as debt has piled up and you need some extra cash in these tough times, or if you are looking to buy another property, you are at an advantageous position today. Take advantage of this scenario. And for people who are looking to enter the market, there is no better time, as these rate cuts will not only improve inventory, the cost of borrowing will be low, and finally people who are not qualifying will get qualified for the mortgage as well. So safely I can predict that the rate of interest will keep going downwards from now until the end of 2025, and maybe beyond that as well. Should you have any questions, friends, about this, anything you want to ask, please feel free to call me and we will discuss your concerns. Take advantage of this current scenario and save money for your family. When you call me, we will discuss how this current scenario will benefit you. And looking forward to all your queries for all. Stay blessed, be safe, and see you in the next video with another topic very soon. Thank you.